What?
If you're a frequent listener of this show, you hear about rotation in the markets. When they're selling something, they're buying something else. Money's always moving around. Not today. Right now, it's a sell everything market, including Bitcoin. Dear earnings, what do you have to do? Down $8 on a great report. Walmart destroyed yesterday. We got a lot to figure out. Ryan Craver is going to join us at 8:35 to talk these retail earnings. It's Friday. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Okay, good morning, traders and investors. We starting out with a hole to dig out of, down 21 handles at 43.6350. Buck down just a few pennies, but still above 103. Bonds, a little flight to quality, fight to safety here. They're up over a point at 119 and 22/32. Crude set for its first weekly decline in about 7 weeks. That's down 64 cents to 79.28. Gold getting a boost up 8.30 at 1923.40. Silver up just 12 cents, 22.83. And Bitcoin, holy moly, you lost that 28.5. You are now down, this according to the futures, $1,385 at 26,455. Let's bring in Triple D here. And Triple D, it's a Friday. It's options expiration. Give me some positives.
Well, the good news is options expirations are often turning points for the stocks. We've seen that happen before. It actually pretty much happened in July, very close. Was that the options expiration? It was not quite, I guess. I'm just looking in July. We topped out on the SPY. Let's go and look at the top of the SPY. Oh no.
It's the
July 27th was the week after. But so you often do see turning points here, but I'm done trying to call the turn in this market here. It's way too difficult to try to call the turn in this market because we've seen, time and time again here that the stocks just continue to get beat up here, at least in the last few weeks. So, I mean, you got to wait really until you start seeing stabilization here. I've tried to call the bottom a couple times on a couple stocks here, and they're losers. So you've got to wait until you start seeing some stabilization before just coming in because the momentum is crushed. The momentum on almost all the stocks is now turned to the downside. We come in, Tesla's down every single day. We're probably going to start with that stock because we got Jonas commenting on it here overnight, who's obviously a well-followed analyst on Tesla. But I mean, it's down every day. It's like death by 1,000 cuts on Tesla. Every day you come in, it's like clockwork. It's down $4 or $5. It seems like every day. So is it going to, eventually have a date with 200? We talked about this a few days ago, and I thought eventually could see the 200. Does it bounce there? Maybe. I think a lot of this stuff does bounce. I think it's going to be a bounce out of the blue, but just trying to call for the bounce and randomly buying the dip is definitely not working in August.
Yeah. Mitch, what did Mr. Jonas have to say?
All right. Well, I think Dennis has a little bit more.
Yeah, I have the actual report in front of me.
Okay,
so
Dennis does?
He has the actual report. So
I have the
Dennis.
Morgan Stanley report. So it's more commenting. It's on Tesla, but it's commenting on the EV in general, the EV market in general. So China EV price cuts, supply demand still out of balance. He's got a price target at 250. We were trying to confirm where his price target was before. The chat might know. You think it was 320. I haven't got confirmation if this is actually a price reduction. It's not a rating. Like, it's not a downgrade. It's just a comment, and it's a possible price target reduction, but I don't know where he was before. So his new price target, if it is, or his current price target is 250, which is still up from where it currently is. But we know Jonas is like one of those that's had a huge bullish scenario on it, where he was saying like $900 a share. And then he also had a bearish scenario where it was like going to $100. I mean, he always hedges himself. So you got to take everything he does with a grain of salt. But With that being said, he's well followed. He's one of the major analysts that on Tesla. So when he comments and it's a negative note on Tesla, the stock is going to listen. And the stock is down $5 here this morning, somewhat because the market is down, but more so because we got Jonas with a negative note here. Not
So
crazy
his
negative.
I got his recent one here. It was in July of 25th of 23. He did a maintain and he had a 250 price target on it.
Okay, so he's still saying the same. So it's still 250 here. So the price target remains the same, but it's a negative note. So people are looking like, oh, he's not getting bullish here. You know, stocks come off. We're talking about a stock that has come off, 25, close to 30% from the highs, and he's still staying somewhat
Is it
negative
margin
here.
talk? Does he
Tesla
mention
China.
why?
He's talking about price cuts. Tesla China effectively cut price on Model Y by 4%, raising questions around excess EV supply relative to slowing demand despite government stimulus. So he's more concerned about China here, and it's comments on China in general with the EV market. So it's not just Tesla, which probably brings us into XPEV here as well this morning, because XPeng reported earnings here overnight, and they're not good here. So I mean, so what Jonas is talking about is concerns with China for Tesla, but then you have XPEV this morning reporting earnings, obviously over in China. And if you give us that report here, Mitch, we might as well do them together. That's not good news either.
Let's go to XPeng. Q2 adjusted EPS at a loss of 43 cents, misses the loss of 31-cent estimate. Sales of 698.18 million, beat the 694.28 million estimate. Total deliveries of vehicles were at 23,205 for Q2. That was up 27.3% quarter over quarter. They're definitely continuing their trend, just not just taking off. And I think that some people expected these to really kind of take off, but there's been a battle, and the demand in China hasn't been as strong as it's expected to be. And China's still going through a lot of economic issues. There was some more news this morning about a property giant filing bankruptcy. So there's a lot of problems in China right now. And I think they really need what? They need some actual stimulus to come. We've talked about this. Will it come? We don't know. We're going to have to wait to actually get the news, but we'll find out what happens in XPeng.
I mean, in here you got a stock, and let's just, you might as well throw out all these stocks here. What about that one? What, VFS? What a joke, man. This market, you've got to be so careful with just randomly buying anything.
IPOs, man.
Wall Street, and I believe this was a SPAC, so not an IPO, but Wall Street throwing crap at us is what basically was.
That's
and when this comes out with a market cap greater than General Motors and Ford, it's like, do not touch this. And props to Herb Greenberg. Herb, I know you follow his show every once in a while there. I will give you a shout out here because you were all over this on CNBC, and you said, don't touch this with a 10-foot pole, or even a 10,000-foot pole, I believe you said. So Herb, thank you for that, because you're absolutely correct. The stock fell 36% yesterday on its third day of trading here, Joel. You cannot go and just randomly buy anything. We're not in that market anymore.
Yeah.
Market caps matter. Story matters a little bit, but not that much. Story maybe was pretty cool, but the story's over in 3 days. Had the huge pop up to the $69 billion market cap, which is just absolutely stupid. And Herb Greenberg, right? This stock got crushed yesterday.
All right, man. You guys just covered 3 pretty good stocks here.
And they're all, so break down the technicals on all.
Okay, first with Tesla. Now, for you guys and gals who've been following the show for a while, I could be a little bit sarcastic at times. Well, I'm kind of being sarcastic here. But based on what Morgan Stanley has given to this market over the last couple weeks, I couldn't be more bullish Tesla at this level.
You're fading Jonas on this one.
He's
getting bearish now. Joel's getting bullish.
The Mike Wilson top, okay?
Yeah.
The NVIDIA run up, which, had to be one of the greatest selling opportunities of the century, right? You're now $25 off that.
Did they upgrade at the top?
Yeah. Well, what they did to the market was almost unfair. They gave it some kind of price target, and then the 2 bozos hopped on the next day, and they raised their price targets too because Morgan Stanley did. So I'm being sarcastic.
None of these analysts are coming on the show anytime soon.
Yeah, well, we've never had it. We never had
if they're listening.
Okay.
So they stuck anyways, right?
Tesla got into we've talked about zones. We talk about when a stock goes up easily through an area, how it's going to go down. If it comes back down to that area, it's going to go down even faster. That's what this has been, a little bit of a drip. But now for this, Tesla, your pre-market low is what, 213.5. I'd keep an eye on that. I think if you want to be patient, maybe get this a shot in the lower 200s. There's always going to be rips. This XPEV, the only level I have for you is a bunch of lows around 1380, 14. And I'm going to pull a Fari Hamzy, and I'm going to say I don't have enough data on VFS to really make any kind of
I think VFS will have a few pops in here. I think it is going, I'm just giving my analysis, which has nothing to do with technicals and all with fundamentals. It's not worth GM and Ford market cap, man. So this is not Tesla. This is not that story. This thing, I think when we look at it a year from now, is going to be single digits or maybe lower. So
yeah, I brought it up when we first saw that car. I didn't even know what the hell it was. I didn't even know what just by not knowing the vehicle itself should have been a telling sign already, right? We've all heard of Lucids before Lucid actually came out, right? And things like that. You want to at least be able to know the vehicle, not just a new entrance in EV. Let's just be honest. They'd have to compete with so many other names here.
There's so much competition.
Yeah, like let's just
why are we giving this one the $69 billion market cap? I mean, that's more than Rivian and stuff. Rivian like are really cool trucks and they're on the road. It's always the market cap I've challenged with Rivian. But this VFS was just basically a joke.
Use the eye test,
a bad
right?
joke for anybody who bought it.
The eye test. It's not out there. It's not out. If I would have seen it driving down the street here in North Carolina, I would have been maybe like, guys, I've seen it. I haven't seen it. All right, guys, let's move on. I did want to state there that, Joel, you were dead on that NVIDIA call out because, I mean, look at those analyst ratings coming in. They were all one after another.
Who is the first? Let's look. Leave this up. This is so interesting here. So
UBS, I told you guys, UBS is the one that I'm going against. I'm going against UBS. I'm telling you guys, these guys been the first ones calling it out here. UBS raised to 540. Then Wells Fargo said
the 800.
I'll do 500. Rosenblatt said, you know what? We'll take 800, baby. We'll take 800. Let's go.
800 for wow. But you know what, though? Hey, maybe they blow it away on earnings, so we don't know yet. Maybe some of these analysts are going to be proven correct. If they come out and blow it away, I mean, the stock is resilient. I'll tell you one thing. It's the strongest one. It doesn't even sell off much in these sell-offs. You've got Tesla down like 30% from the highs. You've got, Microsoft approaching down Microsoft 316 off 365.
That's the one that I need to see.
Talking like 20% off the highs. You got some serious corrections and some of these stocks going into bear market territory. And there is NVIDIA just hanging out, holding up. So, give the analysts a little bit of props because at least they're in the strongest one.
A lot of them are right. But and then this is a great segue into Deere. I mean, what do you got to do? I have the information. They have the information. NVIDIA is going to beat. What if you had that information that Walmart was going to beat yesterday?
Or Deere was going to beat. Yeah, imagine you were an insider. And you knew, and we're just saying, just imagine hypothetically, you were an insider and you knew you got inside information and you knew Deere was going to blow it away. And give us those numbers here, Money Mitch. Give us, and then we'll take it into that context. But give us those numbers for Deere.
Let's do it. Q3 EPS coming in here at $10.20, beat the $8.20 estimate, $2 over the estimate there. Sales 15.8 billion, beat the 14.25 billion estimate. They boost their full year 23 net income outlook and still get the drop. But I'll tell you one thing, guys. I've been talking about Deere's 420. Well, yesterday I looked at it and I was like, man, earnings coming tonight. Well, I can't take it right now. But if earnings could just give me a little bit more discount, I kind of like this one. I like it.
So I got to tell you one thing, though. Like, again, taking it back, just imagine you're an insider and you had the inside information. They were going to blow earnings away.
Yeah,
and you're like,
didn't expect this.
I'm going to buy this stock and just rake it all in, raking it in.
Remember how Cat reacted on their crushed earnings.
Yeah. $10.20 versus $8.20. They blew earnings away, ALB style, like boom, boom, killing it, firing on all cylinders. Market that didn't even run up into the report, Joel. Didn't even really run up into the report. They don't care. They hate stocks right now. The market absolutely hates stocks right now. For this to go down on this report is a slap in the face to all fundamental traders. It's crazy that it's trading down on this report. This report was a blowaway. I don't know if it comes back because it's a crappy market, but what I will tell you is that if Deere reported this quarter 1 month ago, this stock would be up $20 on it. And instead it's down 10 because the worm had the whole market has turned and bears are in complete control. It's hard to be bullish when you see stuff like this. Now again, we are oversold. Am I selling stocks down here? I don't think so. I don't think we're going into this full on market, bear market again, but I may be wrong. I'm not turning around and buying everything either. I'm still sitting with 50% cash on a long-term
Yeah, you don't have any
portfolio.
stocks to sell. You don't have any stocks.
Well,
to sell.
yeah. Well, I don't have that much to sell. I did, and again on that, the stocks that when I went up to the 60% cash, I wish I would. I bought a couple other stocks and I shouldn't have bought them. I mean, half it was Enbridge, which isn't going to be down much because it's pretty conservative. But
Yeah.
we know on that key reversal day, take it back. And we did the show that day. We're taking it back to July 27th. The next day when we had the pop up, I was like, I even tweeted out this was the time to sell stocks. I sold my General Motors that day. I sold half my Airbnb. I sold half my AMD. I sold, what the hell else did I have? There was 4 stocks I sold. There was another one I sold in there too, like a high flyer.
No, you sold Oxy later.
Oxy was later. And Oxy was just because everything else was selling off. So I'm like, I'm done with that one too. But then, but not saying I'm awesome because I did try to take a shot on Unity and that sucks, and American Airlines and that sucks. So, I mean, I've tried to take a couple shots here and they're not working. So you take less shots when it's not working.
All right. Now, one thing I do want to point to, of course, is, and we can talk a little bit about it, is the correction starting to get to the point where it is what we were looking for, right? A correction, right? 10% for the Qs is down towards 350. And I'm starting to get to the point where at least my RSI even indicator is starting to tell me that, hey, we're getting to that point where we're getting extreme on the oversold. So I'm looking at that 350 on the Qs as potentially where we could finally find some sideways action. Is that going to be today? I don't think so. I don't think we're going down another 5 points right here. But we are getting extended away from moving averages, and usually that has a tendency of giving us some whipsaw back. We'll see what happens.
All right, just going back to the price action in Deere, we're down 815. I mean, you had a nice just march up between 400 and 420. Right now, your pre-market low comes in at 411, and I really don't see anything there. Just like eyeballing this upper right chart here, if you're patient on this one, I don't know about today or the next couple of days, date with 400. Right, that was the area of the low right before it took off and made that move close up to all-time high. Has Cat started to retreat? Yeah, Cat is starting to retreat.
They had good numbers too.
Yeah,
Yep.
Now
that was that pop.
Yep, but the pop was sold. I mean, it matched the high the next day, and it's just kind of been leaking afterwards. And now you're at your gap low. Look out here for a 270.50. That was your low on the gap up day. After that, you got a little drop to 265.21. So been selling. S&P's continuing to leak here.
It's just a mess.
Yeah.
I mean, look at the earnings that the companies that have reported, and Deere blows it away and is down. And then you got Estee Lauder, Estee Slaughter, you like to call it, Mitch. It's down $11. I mean, just summing them up. P&W down. XPeng, we already covered. It's a disaster there. I'm just going through the companies that reported. Applied Materials is miraculously holding green, but it's almost given it back. Yeah, Sell the rip, again, working better than buy the dip did in the first half. I'm not joking. Blindly selling the rip is just making money right now. It's almost too easy, and that's why I feel like there's going to be like an Nvidia move or some pop back just to shake out the shorts, because it's almost too easy for the shorts right now. It's almost too easy. So, I mean, that's why I feel like you're a little bit oversold and extended. This is the trading hat on. Long-term investing hat on. I'm still a lot of cash because stuff's just not that cheap. But there is some stuff that's starting to get cheap. So I still think I have your shopping list.
All right, you want to go to applied materials? I see it on the screen. Let's go to it. Let's take a look at AMAT EPS here was $1.90, beat the $1.74 estimate. Sales of 6.42 billion, beat the 6.16 billion estimate. Applied materials sees Q4 EPS at $1.82 to 218 on the high end versus the $1.61 estimate. You're thinking like, man, like this is a really good report.
Man. Yeah.
It don't matter, man.
Don't matter.
It don't
They're in
matter right
control.
now. And
They're trying to take spread on
this is
this
why we
report.
always say it, right? It matters so much, the current environment and the
Yes.
day you report.
Yes.
We're always going to say this, guys. We say this on the show so much. And I feel like a lot of times people think that it matters if they beat. No, it matters on the day and the current environment. Right now, the current environment is we don't want to even see earnings right now.
No, like if you're taking a stock intentionally through earnings report long right now, you crazy. Like that's the way it's been. Like you got to get out before they report because you know what? They're beating and they're popping and then dropping and they're missing and they're dropping and dropping. So I mean, in the end, you're just dropping. So I mean, which is crazy how we have turned. You know, last quarter was the exact opposite, where you had stocks missing. Remember, we bought AMD and Airbnb on the misses and did really well on those. So, I mean, it's the opposite story. If you're selling short on the rips, just blindly selling it short, for the most part, you're making money. There's a few exceptions out there, but for the most part, the gains are not holding and the losses are continuing. I mean, Tesla was a beat and they hammered it. Netflix was a beat and they hammered it. Microsoft, I believe, was a beat and they hammered it. So
was Apple. Apple was a beat and they hammered it.
And they've hammered it. So if you're beating and they're hammering you, and they're missing, they're really hammering you. We know, like a Keys, Key site today, KEYS can be your disaster stock of the day. We haven't mentioned that one yet, but it's down a cool 18 points. So thanks for coming out. Here's another fun one here.
AMAT street leaning the right way into I mean, it's up right now, but there had been strong sellers in AMAT in the month of August. You got that little pop over 142, and there was a couple highs and a 141 handle. Good report, still green. Always on a day like this, you want to hold green on the session. I think a little bit longer term, if the market continues the way it's going, I think you get a look at this 135 area. One low just above it, and then a couple lows just below it. But if you're holding on this one and you're thinking, yeah, man, they're going to, good report. This is the stock's going to be up a lot today. Just make sure it doesn't go red on the day. You're trading 76 cents above that closing price. But that's what I'm looking in AMAT. Not the greatest, like you said, not the greatest day to report. I believe they were after the close yesterday. So people weren't in a good mood and they're in a worse mood this morning.
Again,
S&P's headed lower.
Keep us in context here, though, is that we have went from overbought to oversold very, very quickly. I don't know where all the indicators are here, but you can just feel it. You can feel that, the trend, and people are scared and they're spooked.
The
and
AI
selling
bubble,
good stocks.
man.
They're selling good stocks on good earnings. I mean, I think if you're 100% cash here right now, I think you're buying into this a bit. I think if you're 100% stocks, I think you're not listening to the show because I don't think you should have been 100% in stocks. But unless you're a long-term investor, if you're a long-term investor, forget about it. You're just buying stocks, get companies on dips and go away. But if you're a trader, I think you can start nibbling here. I mean, I've been starting to nibble a little bit back in. It's been a mistake, but find good companies. Like, don't just jump into anything here, but maybe find good companies at reasonable valuations.
I've been nibbling.
What are you nibbling on?
Treasuries, 5.5%.
Well, yeah, treasury. I nibbled on those hard. I nibbled on those beginning of the year, though. So I've been buying in GICs in Canada, and I've been buying those at the 5%. But again, and I'm buying Enbridge. I mean, I'm very, very conservative here. And then I did Unity, so there's a few little speculative plays. But then I get crushed on that one. So certain stocks, you just got to stay away from and maybe wait till they bottom. We talked about the DKNG. Or potentially buying at a 25 money, Mitch. It looks like a great bounce
3 weeks to the NFL season.
It looks like it's gonna hit it today.
Yeah,
it looks like it's gonna hit today. The question is, it's throwing so hard at it. Does it just blow through it? I mean, it's almost scary to I don't know. I'm kind of scared there because I was thinking about buying at this 25, and now I'm like, I don't know. There's so much momentum.
A little more.
So much coming down. Maybe you got to wait until it bottoms and then try to pick it up there. I mean, look at ARKK too. Like, look at what that has done in 1, 2, 3, 4,
Oh
5,
my
6,
Lord.
7, 8, 9, 10, 11, 12, 13 sessions. In 13 sessions, ARKKs went from 50 to 39. That
It
is just
doesn't
a
help it
quiet
when she keeps
20%
adding
sell-off.
her losers, but
Well, I
Okay,
know their whole strategy doesn't work, but
yeah,
I'm just
she
saying
keeps
it's an
adding to
indicator
some
for
that
zombie companies. This is your zombie
100%.
indicator because she
That's
loves
as
companies
good
that
as
don't
it
make money.
gets.
let's change our narrative just a little
Let's
bit
go
because
positive.
we're talking down.
Yeah, give
So
me reason to be bullish. Don't
I
talk
got you.
Bitcoin.
At least something.
okay. So this is going to be the next bullish narrative, and I don't know who's going to start it. Dennis, I've heard you mention it. What's the Fed thinking now? You know, market's in a little bit of trouble here.
They're not
Inflation's
worried.
no,
It's
no, no, no,
Jackson
no, no.
Hole.
Mitch, don't interrupt me.
Yeah.
Let me finish.
Go.
Okay.
Okay. The one thing we've been saying about the Fed in the market? They're market dependent, right?
They are.
And
Yeah.
now they have a little, now the market's getting weak. I'm not talking about any kind of cuts. I'm not saying they're not going to raise up a quarter point, but if there's one factor that would get them is the market coming off, and it's coming off pretty hard. So and that's not until the middle of September. So you got a long
Yeah.
time before that, but you're going to have Fed heads coming out ahead of that and saying different things. And believe me, I'm not bullish by any means of imagination right here, but I'm just telling you, there's different narratives that change the market. And one narrative would be, the Fed, takes their foot off the pedal a little bit. So I'm
Joel,
just trying to look forward.
you're spot on here. And the reason is that they have, and we've said this, it's hard to get full on like bearish, and we're going back to the October lows. When the Fed has this many bullets in their chamber, they haven't had this many bullets in their chamber in 20 years. The rate's this high. Imagine, that the market continues to crash down. They're like, they just lower quarter out of the blue. And I'm saying that, not saying it's going to happen, but I'm saying they can do this. They have the ability to do this. The market rips higher. So, I mean, if we start to go into a recession, they can pull us out of it very, very quickly. And it's why it's hard to get really bearish stocks. Now, certain stocks, that zombie companies that aren't making money, most of them that Kathy owns, maybe those, you stay away from. And the Microsofts and the Apples are extended multiples. But Microsoft comes down to like 22, 23 times. I don't know where it was. It was 32 at the peak. It's probably like 29 or 28. Gets down to like 22, 23 times. I think you're buying it. So I do think that's why I can't be like full on. Like some people have argued, and I've seen this argument going on Twitter a lot the last couple of days, because when the market's going down, the bears really run around. That this whole entire market, go to the SPY, Joel, and show it, that this whole entire run of 2023 was just a bear market rally in an overall bear market. And if you look at the bottom right chart, maybe blow it up so we can see it, because we didn't make new highs. So they're arguing that this is just, that sucker's rally in the whole thing, and eventually we're going back down to the lows. The reason I think that's not going to happen is I don't just do technical analysis, I'm analyzing the whole macros, is that the Fed just has too much ammo. So I don't think the Fed is going to allow us to go back down to 360 SPY. I think that they are market dependent too. I think they'll let us come back down further. I don't think this is really a big deal here for them yet. But if we really got ugly and the bears are saying we're going back down, eventually getting down to like 320 on the SPY, that's just not making any sense. I don't think that is happening. So
Yeah,
I do think you're at a certain point in time need to put some cash to work. And if you sit with 100% cash, you can start nibbling on some good companies at reasonable valuations right now.
I think you guys are right that the Fed would come in if we were in a real market crash. But are we in that? I do not think so. And I think Jerome Powell, if anything, at Jackson Hole, August 25th, he's going to be patting himself on the back, talking about how he's still fighting inflation. I always think that the Fed plays the extreme. They don't come in until the markets actually break, at least from what I've seen in history. So unless that's happening right now, then yeah, you can tell me that Jerome's going to come in and save the market. I don't think that's going to happen. I see prolonged
I'm giving
interest
possible
rates
scenarios,
into later
Mitch.
24.
I'm just giving possible
and
scenarios.
I'm giving the
in
possible
market.
scenario that he won't come in and save it.
He's
we
not
both
coming in
don't
at
know.
436 SPY.
No,
So we need to
that's not
correct.
what I
So
was
let's
saying.
clarify what Joel was saying, and I can clearly see what both points are here. Joel's not saying buy today. Joel's not saying, but what we're trying to discredit is the bears that say we're going to we're going to drop another 30% from here. That's not happening. I don't believe that the markets are falling 30% from here. Some of the bears are even saying more stuff than that. Like this is like the great topping event. We're back eventually going to go down to the COVID lows. I've seen that on Twitter lately. You know, like not, but there's people who are very, very bearish out here. And all I'm trying to say is just cool it with like full on bearishness because the Fed is in a really good position. And we saw, and Money Mitch, you were maybe not in the markets back in 2011, 2012, but when QE started, it was the driver, Joel. QE, quantitative easing, and again, if you're new to the markets the last couple of years, was the driver for a decade of bull market. A decade. They have so much ammo now. They don't even have to worry about quantitative easing. They can just slowly lower rates. A quarter point, the market pops up. Then starts like another quarter point, the market pops up. They have so much ammo. So we don't start, but don't. So that's why I'm saying don't think like we're just crashing and burning and we're going to get short here. I think we're going to get some chop. I think we're going to pull back. I think we have maybe more downside here. I'm still half cash. If I was full bullish, I'll tell you when I'm full bullish. I'll be 100% in stocks on my long-term account. Because why? You know, I'm 47 years old. Why am I half cash? Because I'm still concerned that this is still overvalued market. But you get the S&P down to 16 times, 17 times, which would be a significant fall from here. But then you start thinking like, yeah, I want to buy some stocks. But there's diamonds in the rough here. Look at US Steel. X. You know, this was a good, like, that just made sense. At the PE, it makes sense. Now there's multiple buyers. I think somebody's going to buy that. So there is still opportunities here. I think we just need to like not go full bear. But again, I'm sitting with half cash. So play it conservatively right now if you're playing it from the long side.
And also, and another thing too, because of the way our show is set up, and not knowing like who our audience is, we don't know who we're talking to different people. Okay. And my age, where I'm at, Dennis's age, where he is at, Mitch. I mean, there's different type of investors, different kind of time horizons. If you're listening to the show, I don't know how many people we have in their early 20s or early 30s or whatever. I'm giving the same advice that I gave people that asked me about the markets investing, 10, 12 years ago at Benzinga. It's like, I have always found it's hard to beat the market. I always found it's hard to beat the S&P. I've always found that, whatever growth stocks or whatever these sexy stocks are, sometimes I find them, sometimes I don't get out of them. But you got to look at your investing time horizon. And if you're a youngster out there, and we're not talking about going in and old at these levels or not, but you got to look at like your time horizon. And unfortunately, my time horizon's a little bit shorter than a lot of your guys' time horizon. So we take different stances. Dennis is much more an aggressive timing them. Yeah. Yep. A little bit, younger. So you just, you got to, take everything. I know we're really fired up on the show today and going at it, but it's like, I'd be telling my kids, well, yeah, just put a little bit away each month. Yeah, it's going to hurt, for 3, 4, 5, 6 months in a row, but you just have to look at your time horizon. But we got retail earnings this week. And is there a better person to bring on than discuss retail earnings? This is the best person on Wall Street, Ryan Craver of Commerce Canal. Okay, Ryan, I promise I won't yell at you, okay?
Thank you. And I'm early 40s, by the way. Early 40s. So my time horizon is
Dennis, Mitch, Joel.
There, we rank them all. Ryan's in the middle between me and Mitch.
Okay, Ryan. We do, before we go to the retail sector and things, I know you follow the market on a macro basis, right? Because you have to with the consumer. I mean, we've had a nice run up in the market. We're pulling back. I mean, just no big predictions on the Fed or anything. Where are you at on this market?
I'm a little surprised with what I'm seeing on the side of retail. So Census Bureau came out. I thought we were going to see a tough month last month, whether it's the prime month or something else. It was a lot better than anticipated. The only thing that was really down was furniture stores and gasoline, but we all knew that was there because it's post-pandemic and we've seen what's happened with gasoline. I think it's a little heated in the retail sector. I think we're starting to see some of these earnings come in and realize that a lot of this has been priced in. So I'm kind of a believer of, pull back, don't go too hard, let it sit in your 5% high yield savings and your money market funds.
Okay. All right. Let's just talk reaction, to let's say the Walmart report. I mean, analysts upgrading it going into the report. You get the ridiculous pop in the pre-market. And I was talking to Dennis about it. I mean, it's just such a thick stock. Trades so much volume to let that thing get over 164. I don't think that would ever happen in a regular session. You saw what happened in the regular session. Just talk about Walmart and the earnings report and the street's reaction.
Yeah, I think it was interesting to see Target happen the day before and then Walmart happen and see how the two of them traded pre-market, during the market, post-market. It was quite chaotic. Walmart's numbers were solid across the board. They're heavy into grocery, so they definitely saw tailwinds from the grocery sector. I think there's nothing to be alarmed about their overall earnings, well in line on their inventory, well in line internationally. So they look like they are firing, and forward-looking guidance was decent. Stock-wise, they've been trading at a premium. I mean, do you think 5 years ago when we started having these discussions that we would talk about Walmart being ahead in digital, Walmart trading at a 25 forward multiple potentially? No. So I think a lot of it was baked in. I think they're the classic growth play. You then push that up against Target. Target's trading nearly in single digits forward looking. So their inventories were slightly better. So I think that's why there was a little bit of a relief rally, but they're the classic value play. So are you gonna take the side of digital Walmart, who's in the advertising business, .com business, and grocery business, or are you gonna take the Target play that has definitely had a lot more trouble?
What about Ollie, Ryan? That's one that I've been watching that's just been sticking around, going sideways here on the daily. Wait, do you have any insight on Ollie's bargain outlet?
Yeah, so I think if you look at the bargain business, the dollar store business, the off-price business, so TJ Maxx yesterday, solid numbers. Ross this morning, solid numbers. Burlington is next week. They should be solid numbers. Ollie, it's decent numbers, Five Below. Anything within that value for the consumer, it's doing well. It's showing it. So I'm a big believer if you're going to put the money right now where we are with retail, I probably would lean more towards value as opposed to growth, because we see that the growth was built in for a lot of these growth players.
Ryan, is that do you think because of inflation finally catching up to the consumer, or just more along just because it's just like a new play there? Do you think the consumer is finally starting to show signs of weakening?
I think that the consumer is showing signs of impact of inflation, but it's more a trade of where they're spending their money. So, said another way, I think that we still have room to run on credit card debt. Yes, the headline was as we hit, the highest credit card debt number ever, but yes, we've also grown the economy, so there's no craziness there. As a percentage of overall spending, credit is still generally low. So I think that there's still money to be spent. It's just where are they spending it? They were previously spending it on cruises and services and airlines, and we hear from Delta and United that everything's strong. So I hope that some of that spend is making its way over to retail. But as of right now, it seems like it's not entirely going there. It's more so going into restaurants. And then if it is going into retail, it's going into non-store retailers, so e-commerce. And that brings us to our favorite name we love talking about, Amazon. So I don't think the wallet share is making its way to traditional brick and mortar retail.
Okay,
All right.
let's move
Go
on
ahead, Joe.
here, and let's look forward. We still have some major retailers to report. I know you've never been a fan of Macy's. I know you've never been a fan of Kohl's. You think they're going to go more the Target way, or well, I mean, they both beat, but let's look forward to some of these other retail earnings.
Yeah, so Macy's, the largest store in the world, is across the street from where I'm calling in from. There's no catalyst unless there is an activist that takes it seriously, unless they truly take their real estate and monetize it in some way, shape, or form. There's just nothing to get excited about. It's the same story for Kohl's. If you look at the census, sales info. Everything related to department stores has been negative for now decades.
I feel like, Ryan, this is a gift. This Kohl's rally is a gift to those who've been long the stock. And I sold my Kohl's, started early in this rally selling it. I wish I would have held on longer here, but I'm all out of it. I feel like there's a longer term problem here for Kohl's and Nordstrom and Macy's. And we've had really a ridiculous rally from 18 to 29 in Kohl's. And I think if you're buying Kohl's now, I think you're doing it backwards. So I'm kind of with you here. Is there any department stores that you do like?
Not right now. I mean, I'd throw Dillard's I'd throw Dillard's into that same bucket.
What is Dillard's story? Let's stop there for a second. Why is DDS that I see Dillard's when I go into these stores? It feels like Nordstrom. Why is it so much better? What are they doing right that Nordstrom's did wrong? Because this DDS has been the outperformer. Like, it's done so well that I have other traders saying to me they must be cooking the books to be able to do this well. And I'm not saying that, but that's how well they've done. It's almost unbelievable. So what is Dillard's doing so right that everybody else is doing so wrong?
I think they nailed two things. The first thing is they're great operators. The stores are generally run very effectively. And they are, secondly, they don't fall in love with big trends. So they're very good at the basics. You go into a JW Nordstrom's or you go into any one of the flagships with Nordstrom's, they go big, bold, and crazy. And Dillard's is just steady as she goes operator. They continue to perform. A majority of their business is in the middle part of the country. And they just operate well. I think Nordstrom takes a little bit too much in terms of what they do risk profile wise in the product that they sell. Secondly, they've had for years a premium that they were trading on based upon their off price, so Nordstrom Rack. That started to die. So Dillard's doesn't have that same type of baggage.
Ryan, I want to come.
Go ahead, Mitch.
I want to come in here and ask about something a little different, right? We're talking a lot about clothing. What about some footwear and accessories? What about Nike? That's just been hanging out there. I'm wondering if we're going to see continued struggles, maybe out of China with their demand. Could we see some continued drop in Nike?
Yeah, I think you're totally right. It trades strictly based upon two things. The first thing is China. The second thing is what they're doing with their wholesale channels with companies like Foot Locker and others. I think last quarter what we saw was they realized, you know what, we don't have enough growth ourselves, so we do have to open up those wholesale channels again. I think where it's been basing for the last several months, it's probably a decent play. As long as you set some tight stops, probably around the 102-ish range. I would take it as a bet. I'm not currently in it. And I still think it's a much better play than your other traditional footwear companies like Adidas, who's getting this slight lift due to the Yeezy resale and stuff like that. But they're the player if you're going to play in it. I would take a bet here.
What about restaurant stocks here? I mean, I know that's part of retail. I don't know if that's as many of your customers or not, but you still look at something like Restaurant Brands International. That's not too far off its recent highs in the move. I mean, maybe people aren't spending as much money at Kohl's or Macy's because they're maybe going out a little bit more often. What's your take on that?
You're right. You're right. And the Census Bureau numbers tell us that, right? So we see that people are still loving their restaurants. I think that, and I can tell you the number, I don't have it off the top of my head, but I mean, we're up 11, nearly 12% month over month in the month of July for restaurants. I think that's one place where inflation has definitely come through price increases and people are fine with it. I mean, now we're starting to see this narrative from the New York Times and Washington Post about how we're going to start to see credit card fees being charged as convenience fees for restaurants. I think they would only do that if they believe they can get away with it. And it seems that people are fine with increased prices and convenience fees. I say restaurants are a good place to play right now.
Okay, just going on. I know I'm bringing in other things, but people spending their money on Ubers. Uber had a good report, right? And that was sold off hard. Just looks like it's based on a little bit after report. We know Lyft has been an absolute disaster here, but just talk about the difference for these two stocks, and more specifically with the Uber. They had the good report. Right, they sold the good report. You're getting some consolidation here at the 44, 43, $44 area. I mean, are they spending more money on their Uber going to a restaurant? Talk about these two stocks.
Yeah, I'm incredibly bullish on Uber. I think,
Oh,
and personally, I actually hold it as well. So I think if you look at the fight between Uber and Lyft, Uber clearly is the winner in terms of delivery. No one else has delivery like Uber. Uber Eats is the driver of all that growth that we're seeing. I think they're lighting up advertising in a big way, and I think that is going to just flow directly to the bottom line. Big believer in Dara. I think what he is pulling off will be, a full decade run that will leave Uber as the long-standing monopoly within delivery and or car-related services. You take a look at Lyft. The only real catalyst they have right now, that the CEO has right now, is they're following on the advertising, but they're going to offload all the the city bikes and everything that they have related to bike/scooters. But I think Dara's won, and I think they'll continue to win. So I'm definitely long Uber, whether it's moving people, moving food, or moving product.
all right. So over the years, you've been on the show. You've given us some real diamonds in the rough, and one of those was Stamps.com. Right? It was one of the ugliest looking charts I'd ever seen in my life, and you talked about from your work and what you do, and you were bullish on it. Do you have anything just looks absolutely horrible that you're nibbling at in this environment?
There's two, and might be a little bit more controversial and a little bit more risky, just given the China narrative. But Alibaba continues to be one that I continue to buy into it as we go down. It's still a Goliath, not only in the U.S. market, but obviously in the Chinese market. Um, I, I can't see how this one doesn't eventually start to get some more love. And then secondly, if you open any app store, you will notice an app named Temu. Temu is the next version of Wish, which failed. Yes, I hear that. They're aggressively spending, but they're owned by Pinduoduo, PDD. And they are going after the market hard.
I'll tell you one thing, Ryan. I ordered from Wish before. It took me over a month to receive product. I've ordered from Temu, and it was pretty quick. I've ordered some stuff already, and so I'll just say it's a lot faster than Wish.
Yeah, and they say they're going to be opening up the marketplace so that sellers like my clients can sell on the platform. If they pull that off, they will not be Wish. They will be the next version of Alibaba. They will competitively compete with Amazon. Granted, that's 5, 6, 7 years away, but if they pull that off, and they're definitely the best Chinese app we've seen yet, trying to get our retail market, they could be huge.
One more for you, a fun one that you've made fun of me on. Peloton, and I don't know if you've been on it. I'm still stuck with the
Holy,
stock.
it's $6.
I don't know if you've been on it lately. From the fact that I own the stock from higher price, I don't go on. I can't remember. Plus, it's summertime, so I'm swimming, and I'm not going to be inside on a bike. Any hope for Peloton? False buyouts? I mean, it's hanging here at 7. Is it worth anything?
No.
I find it interesting that your use of Peloton went down as soon as we connected user IDs and you saw my scores.
Oh.
How do you do
Uh-oh.
that?
Let them know.
I'm-
Let them know,
I'm-
Ryan.
I'm actually in the same boat. I mean, we even have the treadmill here in the office. Yeah, no.
Okay.
Yeah.
Yeah, okay. Oh, if that's not a rigging endorsement. Ryan Craver, he's the CEO of Commerce Canal. Next time you're on, we're gonna have to talk about more of your company because you're really on the insides of the retail sector. That's why we love getting your take. Ryan Craver will be dialing you up again for next retail season. Thanks a lot. Great interview.
Thank you, gentlemen.
Ryan.
Have a great day.
All right, let's get back
When
to the
did
market.
Peloton go to $6? I just looked though.
Guys, let's not
Craziness.
put
I just
salt
look
on
at
the
the
wounds.
market cap on.
Don't put salt
Benzinga
on the
Pro.
wounds, Dennis.
That's
Do you know what the
okay.
crazy thing is? I'm like, it's $6. It seems so cheap, and then you go into the Benzinga Pro and you look at the market cap. It's still worth $2.4 billion.
I saw
Who's
you looking
paying
at that.
$2.4 billion for Peloton?
Ugh,
I wouldn't pay $2.4
tough.
million for it.
Oh yeah, you would.
Maybe.
They needed to
Maybe.
come out
I
with
don't know. I
something
think
For the
I
AI.
wouldn't. I
parts.
don't think
For the
I think-
parts.
Okay, I'm gonna no. They got too much debt too. Look at the debt here. Look at the debt. Go to the pro detail. I don't know if you can show us Mitch what I'm reading off of, but they got
Yeah, I can
1.6
do it.
billion in debt too. They don't make money. This is just like there's a lot of stocks, and again, we've seen stocks they
issues.
bounce back. They come back. Nothing goes straight to zero. But I think the end result for Peloton is bankruptcy. This is my opinion. I don't know when that happens, but I don't think the end result is buyout. I think the end result is bankruptcy. So a binary bet, and I will make a steak dinner bet with you here, Joel, that Peloton goes bankrupt before it gets bought out. This is just a forever bet because one has to happen. It either gets bought out or it goes bankrupt. I say bankrupt before buyout.
We gotta up the stakes a little bit, man. Why not
That's
bet
a
a
steak
Peloton
dinner.
on
I
it?
just took it for a fancy steak dinner.
Fine,
You can help me look back.
fine.
Are you doing it?
Fine. Yeah, that means you'll have to get out of your house for 2 times in the last 4 years.
Oh,
to
there
come
you go,
here.
Joe.
It
Get
has
him
to
out.
be. It has to be in
Bankrupt
Michigan.
before buyout.
Yeah, it has to. If it happens, you have to come
Chat,
to Michigan.
let's have a vote here.
In the States, baby.
Bankrupt or buyout, and I think I'm going to be right here. I
I'm
don't
on-
know when it's
I'm
going
on
to happen. It
buyout.
could be years from now. What are you, Mitch? Are you bankrupt or buyout?
I'm buyout.
You're buyout
man.
too.
I'm buyout.
Look at these guys. They're all buyout. There's so many bulls. You guys all bullish here.
You got your budge. Okay,
You go to your bear
All that
cave, man.
1.6 billion in debt. Nobody's buying that debt. Sorry, Joe.
All right, guys. Let's start our wrap ups here. It's 8:54. We're getting
Oh,
close
here's
towards the
wait.
end of the
Somebody's
show
saying, what if
here.
it gets bought out during the bankruptcy? No, I'd say like bankrupt. So you got to watch the footnotes here. So no, I don't know. Like, so if it gets bought out during the bankruptcy, I still win because I'm saying bankrupt before buyout, just to clarify. Because Joel will be like, oh no, but it still got bought out in the bankruptcy.
Let's go ahead and wrap it up here, guys.
Matt just get read here.
Oh gosh.
Yep. Matt just got gave
On
back
that
his
report,
gains,
that was
but,
a blowout. That
yeah.
applied materials report was really good. This is just an awful market here right now. I'm telling you, man, we got to have some type of relief pop or something here. Stocks don't go straight down.
We'll go with your quote, Dennis. I say it all the time. The market likes to hurt where it can hurt the most.
Yeah, you're right.
The most
People
is starting to
keep buying
get
the dip and they're
leaning.
just punishing dip buyers, including me on the last 2 stocks I bought.
Did I ever
We'll see
tell
what
you about the
happens.
Friday theory that the market always ends or makes a higher low for the week on Friday? I keep telling myself that.
Options expiration.
Yeah. Oh yeah, more so on options expiration. The other thing, just let's do. Did we do the Estee Slaughter report? Because
we kind of touched over it, but
yeah,
we
I just
can
kind of
at
want to
least hit the
do that
numbers.
because we're looking
Okay,
at
do it.
the consumer.
All right, Q4 adjusted EPS 7 cents beats the loss of 3-cent estimate. Sales of 3.61 billion beat the 3.47 billion estimate, and full year EPS outlook 343 to 370 on the high end versus a
it's kind of
336
raising.
estimate.
That was
It's
kind of raising
everything's good.
estimates. Doesn't matter.
Expected full year 24 revenue growth of 5 to 7%. So growth there, everything pointing well in the report, even beating and going into the positive versus a loss estimate still doesn't save them.
Still expecting revenue decline in 2024, though. So analyst estimates are just in the gutter, and they're just getting over this really low bar. But let's just take it at face value. If they're making $3, it's trading at $150 a share. You don't have to do quick math, but 150 divided by 3 is 50. That means, so let's say they do $4. It's trading 40 times earnings right now, and it's in the gutter. Now, again, maybe we're at the bottom of the cycle. You know, EL used to make more money, and maybe they can get back to making the kind of money that they did. But this just shows you when a company starts to like lose its luster, how quickly those value traps form. Like, what did EL? Can we go to the pro, Mitch? What did they used to make like 3-4 years ago? They made a lot more money than this. I know that.
Well, before the pandemic, right? And then
What
you
were they
had
making before?
yeah, back
looking.
to work, back to the office. You had people buying.
How do you do
stuff
that in
that-
pro? Like you find it all the time. How do you find like the history of earnings? Can you tell us how to do
Just
that?
go to earnings calendar and put in EL. I
So
can
go to
do
the
it,
calendar
So
Yeah.
you can go to your calendar, you're going to hit
and
the
then type
earnings,
EL.
and then
Yeah.
I like
Show
to
it?
I mean, you could just go straight to the earnings calendar and you can find it there.
You want me here? I can move it over. Hold on a second.
I'm just trying
Joe
to
wants to
see
show
it.
us.
You
There
gotta
it
adjust
is.
the date too, though. Okay, here we go.
Yeah, there
I'm
you
looking
go.
at it
Here you
now.
go.
I got it.
23.
So,
Revenues 3.47. Dennis, they grew revenues. They got up to 4.62. They got up to 5.54. Oh boy, and now they're at 3.6.
Can you blow
So
it up a little bit?
that's
Can't
my
see
whole
it.
screen.
No, I'll just zoom in. There's a zoom in tool. He doesn't want to
Is
do
there a
that.
zoom
you
in?
just
I don't
control and the
Because
little
I'm
wheel
blind and I'm
forward.
like leaning into my computer right now
Control.
to try to read this, and I'm like, I can't read that. I'm so blind.
Well,
I can
Dennis,
show
I'll
you.
tell you. It's Mitch, maybe. In this would be Q2 of 22. They made 5.54 billion. Okay,
Yeah.
and this quarter they made 3.6.
Yeah. So those earnings are dropping.
That's huge.
Yeah. Big
And
drops in earnings.
yeah, and it's interesting that the
Value
20.
trap.
Yeah, okay, all right, that's enough of that. Okay, Dennis, final thoughts for the day here. The old pre-market low is
Options
52.25.
expiration. The way I trade this is I provide liquidity in the open, meaning I'm like out there. If stocks open too high, I'll be short them. If stocks open too low, I'll be buying them. Typically, away from where the fair value is. So not just saying I'm randomly just buying anything, but if stocks, if S&Ps are here and stocks want to open down here, I'll buy this and sell the S&Ps. It's the arbitrage. These are good days for stuff like that typically. Sometimes it's nothing burgers, but sometimes they can be pretty good days. Right now, I'm looking at imbalances, and they will flip all over the place. The banks are actually looking like they have some buy imbalances here this morning, which will be going counter the market. Some of the defensive names, actually, there's a few buy imbalances out there, but that can flip all around here. So that's why I just I'll put some shorts out there, I'll put some buys out here, and maybe I get some stuff. That's from trading perspective. Long-term perspective, I mean, you're coming into some major support levels. We talked about DKNG at 25. I was like, Mitch, we talked about it yesterday. We may get that. I don't know if I want it. Square, I talked about 55. I mean, sold my Square. I can get it back here for way less than I bought it originally, and it was a huge move. 55 is huge on this. Do we get a shot?
One thing.
It's there right now. It's there right now at 55. I mean, but this hasn't been working. Buy the dip has not been working. So I don't know. Do you take a shot? You can take a shot. The 55 is huge, but you got to get out if it breaches it. So I would say even going back, and then sometimes they breach it by you can't just go it's trade 54.90. I get out. You got to give it a little bit of room. But it's straight out 53, then you're probably it's over. So you can take shots here, but support has not been working lately.
I'm going to take a note from, just something that yesterday, and we opened up right near that pre-market high, and we failed. and we know what happened. So because of this, the current pre-market low is near a very good level for me. Even if it's taken out, I'm still going to give it, a little room and breathe. Don't want to sell in the hole. But I think the Bears have just had it pretty easy the last 2 days.
Easy. Too
Yeah,
easy.
and if that first 15 minutes, if they're still holding that pre-market low, I don't think we have any economic data or anything to juice the market. I just wouldn't, I wouldn't be, I just can't sell it down here. Hoping for like the old pop that we get of that pre-market low hold. So that's real close to a low you had in June.
One more question, just and then we were going to wrap up. A PayPal here. Somebody's asking why PayPal over Square. I'd say I take the shot on Square maybe because PayPal just cut through, and this is probably a reason maybe not to take the shot on Square. PayPal is making a new low. It's taking out its October lows. It's taking out its recent low. This is making a new like 7-year low right now. It's making a new 7-year low. PayPal. What a disaster this has been. Just quiet, not so quiet maybe, but quiet lately disaster. I mean, it looked like it was maybe people were talking about the turnaround story back a month ago. It went from 55 or 58 to 75. That is all gone in a heartbeat. It is now making new lows on the move. New 6-year low here for PayPal. PE looks cheap, but is it a value trap? That's the question.
I think also what's affecting PayPal, of course, is Elliott Investment Management dissolved its stake in its companies, and that was released on the 13Fs. That definitely didn't help
They're
it.
done.
I did not know.
They're out.
So that right there, that headline was on Pro, and I
Not
think
good.
that's a very important headline that most are not talking about in PayPal.
Good call.
So when a company like Elliott that had been doing pretty well, kicks you to the curb, it might be saying something.
I think if
All
you're
right,
trying
let's
these
go.
stocks to support, I think you got to make sure that they don't breach it. They breach it, you got to tap out because it's really tough on the bulls right now.
All right, we'll wrap it up. Like always, keep your eyes out there, team. I do feel like always, right? I mean, the market's not going to go in one way. So just be careful out there playing it each way. We've been seeing shorts have been, kind of a nice bounce back like Nvidia earlier in the week, but then comes back down. Just be careful out there, traders. Chasing both sides of the trade right now has been a kind of recipe for disaster. We'll see what happens if we can finally start bouncing back in the market today. I know I'll be watching it on live trading. Joel, any closing print today?
Yeah, closing print. I'm going to be back on with Josh. He's been doing pretty well at navigating these crazy markets. So Tim Quast on Monday, he'll be back. Everyone have a good day and have a good weekend.
All right, we'll now bring you guys over to live trading. That's coming up next. Don't go anywhere. Hit the like if you guys enjoyed Pre-Market Prep.